What a wild day on Wall Street. Yesterday, the stock market was closed due to the Bush funeral, but prior to that, Tuesday, we had a terrible day. It looked like today was going to be a repeat of that, as last night, as the futures market was open, we learned that in Canada, one of the prominent CFOs of a Chinese tech firm got detained, and a lot of people felt like that was going to spur on even further trade tariff talks between the US and China. Well, fast forward to where we're at today. The Dow ends up plunging about 800 points on an intraday basis, rallies nearly all the way back to break even. The NASDAQ actually did close in the green here today. So we talked about that possibility of a flush the toilet moment in Tuesday's video. Did we get it here today? Quite possibly. So we're going to take a look at all that price action, and then we're going to take a look at a sector that broke out here today as our trade application. So with that, let's go ahead and get started. Welcome to the Market Outlook video, presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 6th, 2018. First of all, if you're new, welcome aboard. We're grateful to have you in our audience tonight. Remember, you can subscribe to our video over on YouTube, and while you're there, make sure you sign up for our email distribution list in our description area as well. We're also heavy users of Twitter. Make sure you're following me there. My handle is @BrandonVanZee. And lastly, we have a presence on Facebook through our group. Feel free to join us there with the web address embedded in the logo in front of you. All right, let's go ahead and dive into today's analysis. As you can see here, I've got chart 4B pulled up in front of us. And the S&P 500 did close lower today, so it was down by 0.15%. But for those of you that were watching the market on an intraday basis, you'll know that that would have been probably considered a win. It's not often that you would say a negative price performance would be a win for the bulls, but I think a lot of people would admit that to be the case here today. Now, one thing that is worth noting is that we do have a bearish posture. Go figure, right? Remember, all technical indicators are lagging, so we'll just have to see how that shakes out going forward. But just strictly through price action, I think today was a very constructive day for the bulls. I mentioned on Tuesday that, when we have chaotic stock market action like we did on Tuesday, one of the things that I try to search for when I'm looking for a potential bottom is what I coined the flush the toilet day, with the idea being that all of the weak hands have been basically thrown away, they've given up, they've thrown in the towel, however you want to phrase that. And oftentimes that happens during a day of really heavy volume and on a day where there's an important support break that takes place. Whether we got that today or not is debatable, and it will only be proven true or not through history, but I will say that it at least has some of the makings of that possibility. Let me just quickly show you here. If I right click on this chart and go into maximize sell, you'll notice that today's candle in terms of range was massive. In fact, anytime you see that orange label up there at the top, remember that label can be either orange or blue. In today's case, it is big time orange. It's showing us that today's range on the S&P 500 was 74 points, and the average true range is 45 points. So the typical day would be closer to a 45-point move between high and low. So today was dramatically more than the typical trading range. And as you can see here, much of this candle that was formed today is in the form of this long lower shadow right here. I was in my question and answer session earlier today, and we were kind of looking at the market at the time, and we saw a little bit of a lower shadow, and I said, well, if we can close near the highs of the day today, quite possibly this would be the type of day where that flush to the toilet signal could be occurring. Part of the reason behind me thinking that is you'll notice that our prior low right here, this would have been on, it looks like November 23rd. The low price that day was 26.31. Today's low price was 26.21, so a full 10 points lower than that low price right there. Now, as you can imagine, there were probably a lot of stop orders just a hair below these recent lows, basically with the thought process that, if the price action goes below these candles, then we will continue on with our series of lower highs and lower lows. So you can almost sense that a lot of people were whipped out of the market at the exact worst possible time right there, and we end up closing at the session highs. Notice that it was perfectly at the high of today's session where we closed. We know that because we have this kind of empty body of the candle, and where there is no upper shadow on that candle at all. So it gives you the impression that had the market stayed open for, let's say, another hour or another 2 hours, we probably would have kept going to the upside. In fact, we would have had a good chance of closing in the green. Again, we were basically flat on the day with just a performance of down 0.15%. Now, we weren't able to flush out those that might have had their stop losses below this ultimate low back here in late October, but the feel of the market yesterday, well, in this case, it would have been Tuesday, and today did certainly have a bit of that panic feel towards it. Now, as I mentioned, I was in my class earlier today, so sometimes I don't get a real good feel for reading the tape if I'm in class and I'm teaching, but it did feel like there was a lot more panicky action, a lot more bears coming out of the woodwork, and that combined with the price action that we received here today, I think is a promising, constructive candle. So we'll see if we can build upon that, but I was impressed with today's rally from low to high, and I am looking forward to seeing how the market does tomorrow. Now, remember, tomorrow is also an important day. Just as soon as you thought maybe the volatility was behind us. Well, tomorrow, of course, is the first Friday of the month, and so that means that we get all those unemployment numbers coming out. So there is that possibility that, of course, the markets could get crazy and decide to tank all of a sudden again. Wouldn't be entirely unheard of if that were to occur, but all by itself, organically, today's price action was very, very promising. Now, I did mention the NASDAQ closed higher today. Notice that the NASDAQ was up 0.42%. We also had the Dow Jones close to having a break-even performance. Now, again, similar to the S&P 500, we closed at the highs of the session for the Dow Jones. We were only down 0.32%. As I mentioned before, the Dow was down basically 800 points earlier today, an exact replica of what we were looking at on Tuesday. But, of course, the end result was much, much different as we closed near the highs of the session here today. Russell 2000 was down as well, 0.23%, but again, erased much of the losses that were taking place earlier in the session. So where do we stand now from an intermediate posture perspective? We do have bearish postures across the board. Notice the pink background colors here. And of course, that occurs when that green line drifts over. So remember, that's not David or I's opinion or anything like that. We're just simply telling you what the indicator is suggesting the posture is. So from an intermediate term perspective, that would be considered bearish at this current time. Now, you'll notice that the color of the pink is a little bit darker in terms of the Russell 2000 here, and that just reminds us that we have a strongly bearish posture on the Russell 2000. The reason for that is that intermediate term line on the market forecast is at 43.45 and falling. So since it's below 50, we would consider that a stronger bearish posture, whereas these other ones still have a line that's above 50, and therefore we would consider them weak bearish postures, and therefore they could get reverted back to a bullish posture if we have constructive price action in the coming sessions. Let's go ahead and take a peek at a couple other charts here now. Let's go on over here to chart 4C, and let's take a look at the 3 green arrows chart. Now, as I mentioned on Tuesday, we kind of got rid of all of those green arrows because the price action dictated that we lose the arrow on the moving average itself. Remember, we use a 30-day moving average on this particular chart setup here. And when price closes below the moving average, like it did in all of those indices cases, then it kind of loses any potential 3 green arrow signal that we would have had before that. Note that there is something new to report here today with the Russell. Russell actually now has 3 red arrows. You'll notice that we just barely got a red arrow there on the MACD telling us that we have negative price performance there. So we have 3 red arrows on the Russell. We have a mix of green and red arrows on the other 3 indices. So in other words, this is not an ideal time to be a trend trader. Now, that's not a big surprise to anybody, I'm sure, since we've had basically chop and slop since October at this point, but that kind of confirms it for us there on that particular chart setup. Let's look at our next chart, which will be the 1040 crossover. This will be chart 4D for those of you that are premium market scholars following along at home. As it stands right now, we do have a crossover on the Russell 2000. Again, that's kind of our weakest link at the current juncture. But not too far behind is the NASDAQ. And it looks like the NASDAQ will start painting a pink background here quite possibly as soon as next week with a negative crossover there. Remember, if you ever hear that term in the media called a death cross, that's pretty much what they're referring to there. Now, we use a 10-period moving average and a 40-period moving average here, but we're applying them to weekly candle charts. A lot of times you'll hear people on the business channels talk about the death cross being the 50-day and the 200-day. But remember, with 5 trading days in every typical week, it's approximately the same thing when you're looking at a 10-day versus or a 10-week versus a 40-week. So anyway, we do have some bearish crossovers to contend with here, but we're in a little bit better shape in the excuse me, on the mega caps up above here as well. Let's take a look here at our next chart setup. In this case, we're going to go to some of our 12 grid analysis. As this is loading up, a reminder that the background color of these charts will tell us whether we have a bullish or a bearish posture according to the market forecast. Again, that's not according to Brandon or David. It's basically what is the market forecast technical indicator suggesting according to the various lengths that we're looking at. And our default length that we look at is the intermediate term line. And so as we're looking at this, the VIX was up today, but you'll notice it was only up 2%. In fact, something interesting happened today that might be worth mentioning here as well. You guys will know that on Tuesday, the trade application example that I used in the video was a sold put on BlackRock. Let me come on over here and show you here on the trade tab on BlackRock kind of what happened today, because I found it kind of interesting, and some of you that are not as familiar with options trading might find it interesting as well. Well, you'll notice that today BlackRock opened up at $399.78. That was a gap down. Remember, a lot of stocks were gapping lower this morning based off of that news that I mentioned in the intro regarding the CFO of the Chinese tech firm. Well, we got filled on our trade, so we were selling a put on that. And of course, I had no idea on Tuesday that we would be dealing with that particular news story on Thursday morning, but that's the way it goes. So anyway, we got filled on that trade, and I think we got filled exactly at $7. Yeah, we did. We got filled at exactly $7 on that particular trade. Notice that as of this exact moment in time here on Tuesday's close, we are up $152 on that trade. Now, that all by itself is not entirely out of the ordinary. We could be up or down $150 on any given day, and it's not that big of a deal. But why this is so fascinating and why options can sometimes work to your advantage is you'll notice that we started the session price-wise, stock price-wise at, let's just call it $400, right? $399.78. Well, guess what? We closed almost exactly there. We closed at $400.23. And so when you make $150 on paper, when your maximum possibility for the life of the trade is $700, remember that's where we got filled with $7, then you would assume that you had some very dramatic price action in just one day, yet this shows us that we had exactly zero price action. We opened and closed at the exact same places. So where the stock opened and we got filled on our options trade versus where the stock closed and where we're looking at our options trade now are two different things, right? The stock price action is flat for all intents and purposes. It opened and closed at the same exact level. Our options trade is making us $150 in one day. And so that reminds you why options are unique and are different than stocks. There are 3 different things that go into the options pricing model: price, time, and volatility. And of course, time was not a big factor here today since only one day passed out of the life of the trade. And we already know that price was not a factor because price closed exactly where it opened. So the third of those 3 things in the pricing options pricing model is volatility. And that goes back to what I mentioned before. Notice that on the VIX, we were up 2% today, but look at the shape of that candle there and also the color of the candle. Let me kind of right click and go to maximize sell right here. It's a very dark black candle right there. And what that suggests is that the VIX opened up here and closed down here near the session lows. And so what we had was this fear and panic setting in at the beginning of the trading day, where the fear index, the VIX, was spiking higher, gapping higher to start the day, but closing much lower. And so any of you that were selling premium at the open today, whether you know it or not, were benefited by that behavior of the VIX by the end of the day. You know, somebody that's going to open up the Wall Street Journal tomorrow might just simply look at the VIX and say, oh, the VIX was up 2% today. That was a bad thing for any sold puts or sold calls or different things like that. Well, the opposite's actually true, because what that isn't telling you is where did it open, where did it close. Volatility opened up extraordinarily high and it closed relatively low, and that benefited a trade like we just did. So anyway, I wanted to kind of share that because it is a unique example. Remember, that does not happen often, particularly in just one day's time, but because price action was so wild and volatile here today, we actually saw an extreme benefit out of everybody else that was panicking at the beginning of today's session. So that was interesting. Other things to be aware of on this chart, you know, a lot of people have been talking about the bond market recently, and of course the inverted yield curve has been in the news, this, that, and the other thing. Well, you can see that the U.S. government bonds also did close a little bit higher here today, but they also closed near their session lows. So it's almost giving you the impression that that was kind of exhausting itself. It kind of is making a big launch higher, but now it's almost going back down to earth. It gives you that impression as far as the candle goes there. And so, when we had that type of behavior, it was an extremely negative perception from the stock market, because it gave us the sense that there was this rush into safety with U.S. government bonds. And so we saw 3 very dramatic days higher in government bonds, but with us only closing higher by 0.31% here today after being up much higher on an intraday basis, that also opens up that possibility that perhaps the worst is behind us from a stock market perspective, at least in the short term. Obviously, this bull market has been going on for 9 years at this point. Eventually, there will be a legitimate bear market. There's no denying that. But question is when. This might have bought us a little bit of time here today with the price action. Let's go ahead and take a look here at a couple of other charts. By the way, gold was up a little bit today as well, but it did close in the lower half of its range as well. Let's go ahead and take a peek now at our foreign stock markets chart. This will be chart 4F. And as we're looking at this one, I just want to kind of take a peek to see if any of them closed higher. We did have a couple closing higher, actually a few. We had Brazil closing higher. Now remember, a few weeks back, I did a bull put spread on EWZ, and I believe we're still making money on that. Let me just double check that. Yeah, we're up $4 whole on it. Better than nothing, I suppose, because of course, we've had some chaotic trading since the time we placed that trade. So it is good that we placed a bullish trade. We are making money on it, but you can see it's been largely sideways here. So again, that teaches you a lesson about options trading. Had you bought EWZ, you're looking at basically no performance whatsoever, but you are making a little bit of money on time decay had you been the seller of premium. So EWZ was up 0.41% today. That was a decent up move. We had Russia that was up 0.73% today. Of course, OPEC has been in the news here today with a lot of OPEC ministers meeting in Vienna. We also have Israel up 0.24% today. And then lastly, we've got Mexico up 1.8% today. Now on the board, as far as an intermediate time period, we only have 3 bullish postures, and that's India, which I actually referred to on Tuesday. Remember Tuesday I talked about India being resilient. It was only down, I want to say, like 1.2% or something along those lines when the rest of the market was really getting hammered. So it was holding up better, and it continues to be one of the more resilient foreign markets out there. You can see that it gapped lower to start the day, closed near the session highs, and continues to retain that bullish posture, and is also trading above a rising moving average. Somewhat similar is China. China also closed near the session highs here today, retains the bullish posture, and is trading above that rising moving average. Mexico is not trading above the moving average. Remember, Mexico is the one that's down 17% in 3 months. So they got a lot of work to do there. Whereas if you look at China, China's actually up over the last 3 months. Not a lot of people talking about that, but we do have positive price performance out of FXI if you're using that as your Chinese proxy. All right, let's take a peek here now at our sectors from a U.S. markets perspective. That's chart 4G. And as you can see, it's kind of the bottom rung that is attracting some bullish activity. We have healthcare in the lower left-hand corner. We have utilities kind of second from the right. And then the one that I wanted to kind of really point out here today that I mentioned in the intro was real estate. Look at that breakout we got in real estate here today. Real estate was up 2.74% today. That's a big move. Remember, the stock market, for all intents and purposes, was still lower today, right? The S&P 500 was still down by 0.15%. So when you're talking about one segment within the market, real estate, remember XLRE is going to contain all of those real estate stocks within the S&P 500, and that entire sector was up 2.7% and hitting new 3-month highs. It's worth sitting up and paying attention to. So as a quick reminder, let's come on over here to the website. And I wanted to show you on the sector selector, utilities, healthcare, and real estate. Now remember, I did this graphic last Friday. I'll do a new one tomorrow. But it shouldn't be entirely surprising to see healthcare, utilities, and real estate as the three bullish posture ones that we're dealing with right now. But real estate in particular looked very, very strong and bullish here today. We had a nice bullish engulfing candle. We had a wide range where we closed near the high of the session right there, and we closed at 3-month highs. So keep your eye on the real estate area. While we're over here on the web, quick reminder to those of you that are premium market scholars, since I do my question and answer session on Tuesdays, it's usually a few hours worth of students asking me questions and getting my responses. So if you are a premium subscriber, feel free to check out the various questions down here that folks were asking me along the way. We had an excellent session, a lot of them dividend related. So make sure you're taking a peek at that when you get an opportunity. That recording is now posted to our website. Also, a quick reminder that if you get value out of these Market Outlook videos, make sure you're letting us know about that through your likes and different clicks and things like that. Thank you to the 102 people that clicked like on Twitter for my video on Tuesday. It means a lot and lets us know that we should continue to do these going forward. So 3 different clicks here will get you done. 1 on Twitter, 1 here on Facebook, and then 1 here on our website. All right, let's go ahead and take a quick peek at the one-day performance from a sector perspective, just to kind of shine some additional light on real estate. Real estate was up 2.74% today. Notice that the second best performing sector was communications, but it was up less than half of that. It was up 1.12% today. On the downside, we did have those energy stocks continuing to suck wind down there. They were down 1.8%. But by far and away, real estate was really, really cooking here today. So I thought we would concentrate on that particular sector for our trade application example here tonight. So let me come back on over here to the charts. I'm going to just pull up one grid for the market forecast indicator. So let's go over to chart 4A here. And first of all, there were a number. I mean, if you go through the real estate stocks, remember, I do have all of those various sectors posted on our website as well for those of you that are premium members. But, a handful of them that I identified here today as I was scrolling through some of them myself that looked interesting were BRX. Here's Brixmor Property Group. Notice that bullish engulfing bounce off of that rising moving average there, bullish market forecast posture. Take a look at HCP. Now, this is something that my top-down trend trading class on Monday has been all over. In fact, we own one of the healthcare REITs out there, but that has been a continued theme. Healthcare REITs had been kind of the leading area within the REITs here for the last few months. This one is HCP, and you'll notice that we're hitting new 3-month highs here, and we kind of bided a little bit of time going sideways on this particular stock, and now boom, off to the races, up about 4% here today. Another bullish posture according to the market forecast. Another one that looks somewhat interesting, Store Capital. Take a look at this one. This is STOR. Notice again, we've had positive price action. I mean, a lot of people felt like they've been through the ringer here in the last week. Well, take a look at this. This particular REIT is up 1, 2, 3, 4, 5, 6, or 7 days in a row, almost as if it didn't know that the stock market was struggling. Well, today certainly put an asterisk or an exclamation point on its recent move, because it was just recently riding that upward trending moving average. Today it just exploded higher, up 2.6%, clearly at 3-month highs, bullish posture above that rising moving average. Others that look somewhat good, SPG, which is probably the biggest REIT out there, Simon Property Group, a little bit more liquid for those of you that are dealing with options and different things like that. Well, this one had a beautiful looking candle today too. We closed near the high of the session, bounced off of that rising moving average, uses it as a launch pad higher. And while we didn't quite get to a 3-month intraday high, you can see that occurred right here, we did have a 3-month closing high as of today on Simon Property. It was up 3%, another bullish posture stock according to the market forecast. FRT looked somewhat interesting. FRT is Federal Realty. This is the only REIT that is also a dividend aristocrat company. Again, notice the bullish engulfing price action there out of FRT, another bullish market forecast posture and rising above that moving average there as well. Let's take a look at ESS. This is Essex Property Trust. Again, nice consistent upward trajectory here, bullish engulfing, closing near 3-month highs, upward trending moving average, bullish market forecast posture. And then let's take a look at American Tower as well. Remember, this is the cell phone company, but it is categorized as a REIT. And you'll notice here again, nice bullish engulfing, bullish posture according to the market forecast above a rising moving average and closing at a 3-month high. So that's just a smattering of those names in the real estate area that have been doing so well here recently. The one I wanted to focus on in our trade application today was PSA. This is Public Storage. This one's been a little bit choppier, but the chop hasn't been terrible, and it's also been consistent, meaning that, yeah, from high to low, has been a little bit aggressive in the last 2 moves, but importantly, we continue to retain that status of higher highs and higher lows. If you look at where we bottomed out right here, we clearly have a higher low right there, another higher low right there. You can also see that as of this candle right here, we had a high, we had another higher high here, and as of today, we have now yet a third higher high. So that is a trend, right? That's the epitome of a trend, higher highs and higher lows. Clearly, we have permission, according to the market forecast indicator, to be bullish on this. After all, that green line is in the upper reversal zone, exhibiting that strength. We are above a rising moving average right here, and nice bullish engulfing price action here today, along with the rest of the real estate cohort. Also notice the big volume that came in. Remember, when you see this black arrow on this volume candle down below, it basically signifies that we had at least 1.5 times average volume. And this was not associated with any earnings report. So this was organic volume that took place here today. That's even better. Gives us the impression that perhaps some institutions were getting involved with this one as well. So what we'll do for our trade application on PSA, which is Public Storage, is come on over here to the Trade tab. This thing's yielding about 3.7%, so pretty average for a REIT, but still a strong yield nonetheless. And as we look at some of the available choices out there, of course, we're going to have a harder time trading the December contracts with only 15 days left. So I'm going to go out to the Januaries on this one, and I'm going to do what's known as a long call vertical spread. Now, the way that we typically do those is we buy one call in the money and sell another call out of the money. So this thing has $10 between its strikes. So the first one that's in the money is the 210. So I'm going to right click and I'm going to go to buy vertical. That loads up our trade down below, which is going to be basically the 210, 220 debit spread. Now, this is another one like I showed you a few weeks ago. Maybe it was just last week. Can't remember exactly the day, but a recent day where we were talking about whole logic and the idea of putting your getting a head start in a race, I think is how I phrased it. And that can be achieved occasionally with some of these debit spreads. So I'll try to explain. Part of this spread is us buying a call. In this case, we'd be buying the 210 call. The other part of the spread is us selling, that's the minus one right there, the 220 call. So we have to pay $5.26 in order to access this debit spread. Now, you can figure out your break-even prices on that by simply taking the debit and adding it to the strike that you're buying. So in this case, 210 plus 526 is 215.26. Notice that this stock, or this REIT in this case, is right at 216.23. So in other words, we're getting filled at a price that is already beneficial to us. If this stock were to close exactly at 216.23, technically we would make about $1 based on where our debit spread is priced right now. Now, it is true they've got a dividend coming up and other things like that. So, there are always complications to consider, but if you believe that the real estate space in general will continue to go up in the coming couple of months, basically the next 43 days, then this one would be an interesting choice as long as you assume that Public Storage will be trading above 220 on expiration day in January. It's about a 1-for-1 risk-reward setup. Remember, when you're paying about $5 for a $10 wide spread like we have right here, you basically have your $5 of risk that you're paying out of your pocket in order to try to achieve the $5 between here and $220. And if you look at where 220 is on the chart, it's right up here. So if you think that this trend will continue of higher highs and higher lows, then there's a decent chance that this one could be a profitable trade going into the January expiration as well. So let's go ahead and place that trade. Confirm and send one more time. Everything looks good there. We'll just do one contract here and send it in. All right, well, I want to thank you for joining me here today. A very interesting day in the stock market. Perhaps some very constructive price action here today to suggest that we might be able to have a little bit of a rally going forward. Now, that's if we don't get dumped on tomorrow with the big jobs report. So we'll have to keep our eyes peeled on that. But right now, price action was very promising here today, and I think that should lift the spirits of people who just this morning thought that they were in a little bit of despair regarding some of those really negative futures prices that we saw before the market opened. So I hope you guys all have a great weekend. Remember, David will be back with you tomorrow, but this will be my last time with you this week. Good luck to all of you that are in the fantasy football playoffs. That starts this weekend as well. Best of success with your trades and your investments, and I'll see y'all next week. Take care, everybody. Bye-bye.